Hello, everyone. I wanted to jump in again with the importance of debt. And in order to get deals right, you need to understand how the world of lending and debt works. So, number one, portfolio lenders or balance sheet investors. These guys are great for deals that might be a little bit more unique and fall outside the bounds of traditional lending institutions. They are fantastic if you're just starting out, and it's the lifeblood of many investors. Think credit unions or local community banks that hold it in a portfolio rather than actually selling them in a secondary market to other institutions like lenders do. They actually keep the debt in-house. So this is great because they can make the decisions based on their own criteria and can be more flexible than maybe some of the other agencies that you're reaching out to fund your property. I would say they might be more comfortable with the use of subordinate debt or make exceptions for you if you need it. But the lending process is often less rigorous, which can be great, less paperwork, and fewer third party debts, which might actually reduce your closing costs, reserve and any escrow costs. I love it, but you have to make those relationships at a more personal level. The cons are they could sometimes be unfavorable terms, and the debt is actually full recourse. So there might be more implications there that you should definitely check out. Another type, number two, is agency lenders. Think HUD, Fannie Mae, or Freddie Mac. These are backed by a government agency. And when I said Fannie Mae and Freddie Mac, what I really mean is the Federal National Mortgage Association, Fannie Mae, or the Federal Home Loan Corporation, Freddie Mac. The Federal Housing Administration, FHA, is actually available through the U.S. Department of Housing and Urban Development, or HUD. So it's definitely alphabet soup, but it's really, really important to know who these guys are. They actually don't lend directly to investors or to individuals, but others are actually seller servicers or delegated underwriting and servicing lenders. The good thing about these guys is anything that's backed by Fannie Mae or Freddie Mac, there's lower rates, lower amortization period, and it can therefore improve your cash on cash return. It's often non-recourse debt subject to bad boy carve outs. We can talk about that later. It is standardized and repeatable, so it's really great to scale for repeat borrowers as you continue to build your portfolio and build relationships that are recurring. There's a wide range of programs and terms available, like green financing programs that actually can reimburse you for solar energy or things of that sort. And they're great for value add properties and allow supplemental loans or assumable loans. We'll get into that in another episode when we talk about subject to or Pace Morby's. That's where I learned it all, is Pace Morby's mentorship, creative finance. The cons of this, though, are that they can be a lot slower than local banks or credit unions, and there's a significant reserve and CapEx requirements. Sometimes they do it in-house, but oftentimes they'll actually outsource it with loan servicing. So it's really hard to tell, but that can be a difference and can actually be at your disadvantage. Subordinate debt on these is not allowed. And then a third type I wanted to bring up is commercial mortgage-backed security lenders, or sometimes we call them conduit lenders. These are actually sold on the secondary market. So the pro of these is they can be more competitive and flexible in the lending criteria. They can be assumable, which I personally love. No recourse loans subject to those bad boy carve-outs, and some might allow mezzanine debt. If you're a single family or small multifamily investor, don't worry about mezzanine debt, but we can get into how debt can be tiered and what liens look like at a later time. The cons of these can be there's stiff prepayment penalties. The customer service can be infamously subpar. So if you need a quick reaction time, you're probably not going to get it from these guys. And the lockout period can actually be 1 to 3 years, resulting in defeasance. They also do not offer supplemental loans. Those are kind of the three main bodies, but the last little bonus I want to give you is insurance companies. So these are notoriously conservative approach, but they do have very competitive rates. And they're very solid borrowers with Class A assets in top tier metro areas. They will serve you. They do lock in rates for long terms. They are a really good option when it comes to holding a property for a long time. If you want a quick turn, don't go with an insurance company, but could be good. The cons here are they're very strict in terms of lending standards for the most part if you're a borrower. The leverage is really low. It's capped at 60% loan to value usually, and the defeasance requirements are expensive if you pay off your loan early. So I would say that's kind of more of a lower priority, but it might be something that you want to look into. Now, this is my favorite part, creative lending. This is the creative finance world where Tusk Funds, my company, along with Rob Sema and Lynn Bell, this is where we play most. This is great for aspects of the deal that kind of preclude traditional debt, or if you're a borrower and you cannot get conventional financing. We allow it to close more quickly. If it helps to reduce cash required, you can get, as the name would suggest, incredibly creative in how you structure the deal, timing, who's paying whom, that kind of thing. And if you have an aversion to traditional lenders, creative finance is your go-to. Mortgage assumptions kind of are tangentially related to this. If there is debt in place, you can actually see if the debt is assumable and ask for a copy of the note. I won't get into too much of that right now because mortgage assumptions need their whole other thing, but I just wanted to give you a quick overview of the different types of debt. At Tusk Funds, we can help you. If you have any questions, please feel free to book a call and we can help you either raise capital in the creative realm or help route you to some conventional financing. Good luck, and I wish you all the best in scaling your portfolio.